Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Global markets head into a pivotal week as the long-delayed September jobs report and non-farm payrolls and also the Fed's October FOMC minutes finally land post-shutdown. The last number that we saw from the non-farm payrolls release was 22,000 jobs added and an unemployment rate of 4.3%, while wages was up by 0.3% month on month. These numbers now due for a fresh reality check, as all eyes will be seen to the US dollar and also on the Australian dollar as we look ahead after last week's punchy Australian labour data, which showed unemployment down by 4.3% and the jobs surging by 42.2k, indicating a strong 55,300 in full-time roles. China's solid October readings offered support as well, but the shutdown delay data and fading December cut odds has put a little bit of a mixed spin. Nevertheless, keep an eye on these technicals because if they do break down a little bit further, then we could see a bit of profit taking back towards 64.90 this week, or even down to the clear bottom side of this range of 64.30.50. But if we do see momentum returning after Thursday's whipsaw price action, we could see a rally back towards 65.5 to 66 cents and still likely to see profit taking there. Turning to the euro, after its strong march towards this top side of the range, still finds a little bit to the upside, I feel, from the ADX supporting the trend, and therefore look towards somewhere of 116.65 and a cap at the moment at 117.35.50, with any weakness finding support around 115.35 to 75. Turning to dollar yen, well, keep an eye on this 9-month high, which is also seen as a rising wedge. A classic caution signal as fading momentum and tightening ranges hint that demand may be losing control, and therefore from this hanging man here could see a break, and if so, trigger the move back towards the bottom side of 154 down to the lows of 153 and reassess at 152.90. That's the trigger point further to the weakness. Looking to sterling, I like this pattern formation, but we do need to see a stronger break to the upside to get that rally on to 133. Any weakness should find support around 130.80. Wrapping up with commodities, heavy profit taking comes back into play now and looking back towards 4,050 as the bottom side of the range. Technicals have been buckled here, so let's see if the market can continue its profit taking and see if 4,050 holds and gets a correction. Wrapping up with oil, well, another good rally coming through here and still keeping it on track towards 62.5 as a potential target, and demand still seen around that key level of 58.40.60. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest report, and I hope you enjoy the great start to the new week.